Alright, Crypto 101 here, and I'm back with another session, and this time I'm going to do a news update on all the ETFs that are coming out, including Huobi and Binance, as well as JP Morgan's announcement that they think that ETFs for crypto is the holy grail. And another one is Fidelity as well, how they're going to come up with their ETFs. And starting off, we're going to look at Fidelity. So title of this article is Investment Giant Fidelity Issues Job Offers for Crypto Exchange Development. Alright, so if you don't know what Fidelity is, it's one of the largest investment firms in the US. Alright, Fidelity with its $2.45 trillion under management has allowed clients to hold Bitcoin alongside traditional assets and is now reportedly circulating job offers related to building a digital asset exchange. So one, they're trying to build a crypto exchange. And two, they're creating a Bitcoin ETF portfolio for their clients. That's $2.45 trillion. That number is where a crypto is not even 1 trillion, not even close to that. All right, crypto is 400 billion approximately for their whole in just one firm. Okay, they have so much money that they're managing. It overshadows crypto, the entire crypto space by far. So just imagine when their clients are tired of that small 2 to 5% gain every year, their attention is going to be focused onto the Bitcoin ETF portfolios that Fidelity offers. All right, so just imagine several billion coming out of Fidelity's fund management from their clients going into Bitcoin, all right, to the Bitcoin fund portfolios. What do you think is going to happen to the price of Bitcoin when that happens? The floodgates will be open. So this is going to take some time. They still haven't had proper regulation to give the full green light on it to create these portfolios in the United States, but it's in the works. There are several companies that are trying to get Bitcoin ETFs on Nasdaq, and it's still in the process. Even the CEO of Nasdaq shown a very positive light on cryptocurrency for the future in the Nasdaq market. So it's going to happen in a matter of time. So that's why it's perfect for us to get in on these prices right now. And if it goes lower, keep adding your positions. All right, so just imagine the numbers, $2.45 trillion. Okay, that's from their fund management for Fidelity. All right, and you're going to have billions siphoned into Bitcoin over time. All right, so next up we have Huobi, the HB10. This index consists of Bitcoin, Huobi tokens, EOS, ETH, BCH, XRP, LTC, IOST, ETC, and Dash. Alright, if you notice that, of course, the Huobi is their number 2 largest investment in that portfolio of their ETF. Hey, you guys better get your hands on some Huobi. HB10 gives institutional players a chance to make low-risk entry into crypto space through products in which they can easily exit the market without having to sell individual cryptos. Now, this is really important to notice. If you're a large financial institution, you don't want to sign up to a crypto exchange and create a wallet, get some Bitcoins, send it over to that exchange and wait, 1 hour, 1 day, and then having to buy the cryptocurrency of your choice. And if you're trying to get 10 different ones to diversify, it'll take you like at least several hours to get that done. All right, the whole process takes a long time. And just imagine if you want to liquidate all your cryptos and try to get out of the space. If you've done that before, trying to sell all your cryptos in 1 day, it takes a while. It takes a long time, and it's very burdensome to sell each one individually, right? It takes time. There's no one button where you could just click and just sell all of your cryptos at that market price. There isn't a button for that on most of the exchanges. I wish I knew about an option like that. If you guys do know exchange that has a button where you could just panic sell all your cryptos, please let me know. That'll be great to know for any exchanges out there. But I haven't seen an exchange that can do that because you have to sell each cryptocurrency individually. That's a huge hassle, and what the HB10 offers is a portfolio where you can invest on the top 10 cryptos on their exchange with a quick one button. All right, to buy and sell just like that. So that's where they're heading at, trying to get mainstream adoption, financial institution, bigger money to come into the space by these portfolios. Right, so this huge boost for crypto because it is the lack of institutional money in the space that has some extent curtailed to its growth. But the Huobi 10 index is not a unique product. Many more are coming up, and that's true. There's a lot of different ETFs that are coming up, like Coinbase, Binance has their own fund. Even Nasdaq will be having some ETFs ready. It will be a race to see who can get their ETFs out in the market to get the financial institution to come in. The issue of crypto ETFs has dominated the airways for some time now, indicating that more exchanges will be launching similar products in the near term, which is what we just mentioned at first. Once crypto ETFs become the norm, the amount of liquidity that will flow into the market will shake it up and push it over $1 trillion market cap. And this is very true. It's pretty obvious to me. If you could see big money, financial institution, banks, hedge funds, hey, you name it, they're going to be all over this, okay? This is their way of entering the crypto market. So if they wanted to enter crypto, if these large institutions wanted to enter billions of dollars into a market, let's say Bitcoin, for example. Right, so these financial institutions with billions of dollars want to enter cryptocurrency, and let's say, for example, they were investing into one coin and they wanted to get it for cheap, right? So let's say Bitcoin was at 7,600. Now, if they want to pour billions of dollars and buy into one coin at one time, what do you think is going to happen? They're going to buy up all these orders here. So let's say 7,600, the next buy order is 76.1. They're going to have to buy up all of this because look at the volume amount in BTC. You can see that all this, I mean, if you're comparing billions of dollars, their 24-hour volume is 4.48 billion. Now, if a financial institution with billions of dollars wanted to jump in with that much, let's say $4 or $5 billion all at once, they will be buying the price so high that it will not be a good investment for them. So it could go up to from 7,600, they'll keep buying it all the way, buy up all the orders until it reaches maybe 9,000, 10,000. That's not ideal. So the supply is not enough to meet the demand of the banks, and that is why they're waiting for these ETFs to get fully licensed and regulated before they come in. Huobi is going to be open to the public. Now, instead of just buying one cryptocurrency like Bitcoin, for example, now they could diversify and buy a portfolio of cryptocurrencies which has a much larger volume for them, so they won't have to buy at a higher and more expensive price than what they want it for. Okay, so, and it's also too, it's very convenient for them to just buy the portfolio instead of each individual one, and it's very liquidable because this is all high volume cryptocurrencies, and these, they could get in and out very fast if they want to. Let's say, for example, the market changed and they felt like they wanted to liquidate their assets, they could do it with one swoop. All right, so this is very attractive to financial institutions, and this will become a subscription-based service where you can use Bitcoin, Ethereum, or Huobi HT tokens to purchase the ETF. And it varies from a range of $100 minimum to $10 million USDT. So anyone could invest into this portfolio instead of having to do, it just takes out the guesswork of trying to pick out the best cryptocurrency, because you don't know that one coin that you invest in, that you went all in on, could go down 70-80% out of nowhere just based on bad news, right? So this will minimize the risk, and it allows for anyone to come in to invest into this portfolio, the H10, even up to $10 million. So now this will allow for financial institutions to also come in with that much money to invest into an ETF. Of course, HT is the second largest portfolio holding on their ETF, so you can bet that this will go up in value. HT, the Huobi tokens, is going up in price, and you guys better watch out for this. Now, if you look at the volume of HT, it's only at rank 59 at $288 million, okay? It's doing good, but compared to Bitcoin, EOS, like these are all top 10 coins. So the volume on that, it's way higher than HT. So if anything, you're going to see a price influx in Huobi tokens because the same amount of money is coming in, has a lot of more room for growth in terms of market cap. And it's going to catch up with a lot of these tokens because there's so much more money coming into the HT token through the H10 composition that they have. So you guys better pay attention and watch HT tokens. It's not going to happen overnight, but on early June, they're going to have the H10 ETF available, right? So it's a good time to get in now before it gets released. And for HT, looking at the price now, it's a potential double top right here. You see the volume dying off, so it could drop. We don't know, but I enter my position at $5.50 before this took off over here. The thing was, I did not know how to get into Huobi a long time ago. I always wanted to get into that investment, but in order to register for the website, I believe you have to use a country other than United States. So that's how you actually register with Huobi, and invest into the HT tokens. Right over here, we could see a double top. We don't know. Also, Bitcoin's price have a lot to do with it too, so we'll see what happens. But there's a lot of speculation about Huobi and the ETF, so there's a lot of hype driven. So we don't know how much higher it's going to go before it corrects. But at this point, it did see a little correction, and it could be a double top where this is trying for a second time to reach up to this level and higher, but it's not even coming close. So we've seen the volume dying off. It's not a good sign. So we could see this correct even further, because this was just a bounce. We might see this correct even further. We might not. Just start getting positions ready, get a little bit in, just make sure you have your foot in the door, because once the floodgates open, it's kind of hard to stop with all this money coming in. So we just want to get in before the ETF gets released to the public, because there's a lot of financial institutions on standby just waiting to jump on this. All right, it's convenient, easy. All they gotta do, deposit the funds, buy it, and that's it. One button, they're done. And this is a fully compliant company, so they don't have too much worry about regulations. But it's not for United States. Well, this is an Asian company, and I believe their office is in Singapore, so they do have several offices throughout the world, but not United States. So anyone else can invest in this, but not companies that are from the US. So what I would do here, it's a tough call because this thing could just drop. You definitely just want to start getting positions. $5 is a good mark. $4.50 was the last, a little higher than that. Get in there. This would be the lowest that you can expect it to go. All right, if there's a retracement, I highly doubt that it will get onto this level, but maybe it might bounce around here a little more, but who knows. Once the ETF gets released and people start pouring money into it, you can see Huobi tokens price going up a lot more than this. So just get prepared, start paying attention to it. That's all I can say. There's no guarantee on what the perfect time to buy in is, so that's what you got to do, cost dollar averaging, and just keep buying as it goes down. All right, that's the best way to do it. That's how you get your foot in the door in this situation. Next up, we have Binance. They announced a $1 billion funds for startups. And what is the significance of $1 billion funds? Now think about it. So with this $1 billion, these large investors are investing into their company through BNB tokens. So there's going to be $1 billion poured into Binance coins, which will obviously drive the price up, right? So because Binance is only at 1.9, so let's say about $2 billion market cap. Imagine a third of this market cap coming into Binance. All right, this will take the rank. Man, this could take the rank. Let's see where we'll take the rank. So we'll put at, let's say it will take it to $3 million. Now Binance would jump all the way over here above Monero, getting closer to the top 10. That's very possible because they're raising $1 billion, which gives their token added value because they need to purchase BNB tokens in order to invest into this startup fund. So it says Binance Labs will focus on startups working with public blockchains, decentralized exchanges, custody payment wallets, stable digital currencies, and compliant alternative trading systems or security tokens platform. So basically it just goes through a whole range of a different type of cryptocurrency or blockchain technologies that they will be investing in. Not all funds will be given directly to blockchain startups though. Okay, so it's not just a fund for ICOs. Binance will also be funding other blockchain funds as part of this initiative, provided they already have a fund size of 100 million minimum accumulated assets under management. It sounds like Binance will be using this fund to also invest into other ETF funds. Wow, so that's another way for them to diversify further. I mean, if you have that much money, it would be great to get into these another portfolio for a portfolio. Okay, so and these have a standard minimum of 100 million accumulated assets. All right, so just imagine into a fund that's diversified with ICOs that Binance selected, right? And also portfolios that have a minimum of 100 million in accumulated assets. All right, so that further diversifies the risk because that will be a lower risk investment versus the ICOs. So this is it's a pretty incredible portfolio that they're building, and we don't have to worry about regulation because they're fully compliant in Malta. They're moving to a small little island in Malta just to be fully compliant throughout the entire world. All right, because they ran into compliance regulation issues in Japan, so they had to move their office there and relocate in Malta, which is supposedly the safe haven for blockchain companies. Now, not only are they going to raise all this money, but they're investing into these projects like this one here, 30 million on the first round for the privacy focused altcoin, mobile coin. And this is one of the incubator projects that are in the portfolio. All right, so just imagine if this takes off, that's additional money and revenue that Binance will be earning, and also their investors. And Binance is seeking a total of 20 such partners. Now, they would have no problem getting partners for these kind of crypto assets, for these kind of ETFs that they're creating. All right, so it's Binance. They're the leading exchange in the world, #1 right now in CoinMarketCap. And I did my last review on them several months ago when it was somewhere around $9 to $10. So I got in at a very good price. All right, it was obvious to me that Binance is going to be a #1 exchange and will stay that way for quite a long time. Right, so there you go, guys. So it's hitting its high, and it looks like it did not fully break past the $17 level. It continued down, but we could see this break past because there's a lot of buying pressure, and you can see the volume picking up over here still, that this thing has a lot of momentum going for us. So even buying now, having just a little, if you don't have Binance coins, you guys better at least consider getting some now. And hey, if it drops because of this spike in price, continue to cost dollar average all the way down, because once the $1 billion comes in, it's easy to see from 2 billion market cap to 3 billion. Just imagine Binance, the price right now would be somewhere around, hey, $25, $30. Very possible. Once the full investment funds come in of $1 billion injected into their tokens, all right, so that's going to actually bring the price somewhere about 20, anywhere from 20 to 30. Okay, you can safely say that very easily. All right, it's only a matter of time. So we want to get position wherever it's at right now and all the way down. You know, if there's a retracement, because it could happen, Bitcoin price could drop, so you want to keep entering your positions and cost dollar average so you get the lowest possible price. All right, don't slam everything all at once at this price. Just cost dollar average, so you'll get the average price. You know, if it goes up, that's fine, you'll pay a little more, but as long as you get your skin in the game, you're set, because this $17 here, it's, you know, 6 months from now, it's not going to be anywhere close to that. Okay, because these are all 10x investment opportunities in the next 6 months. When we're talking about injecting $1 billion into their funds, we're talking about the H10 on Huobi's ETF, allowing anyone to invest into that. It's just going to bring a lot of financial institution money, and that's where it's at. All right, it's giving these financial institutions, the banks, the hedge fund, the opportunity to come in and invest into a low risk investment, because instead of just having only one cryptocurrency, now they can hedge their risk and diversify into a portfolio. So this is the opportunity, and once the regulations passes for all the other ETFs, so once they're waiting for the green light in US, the floodgate's going to be open. When the ETFs gets onto Nasdaq's exchange, there's going to be a free-for-all. Now we have the CME, CBOE, that futures that are allowing people to short Bitcoin. This is different. This is allowing people to buy Bitcoin only. All right, it's not to short it. So with these ETFs, you can buy into crypto, you're not shorting it, so this will offset the problem we have with CBOE, amount of sales and price drop and shorting that happened with December of 2017. All right, so this is going to offset the CBOE CME 2017 futures market, where all these large institutions are shorting Bitcoin. All right, so this is going to change the game, where now every financial institution, every hedge fund, every bank can come in and buy up the price of these cryptocurrencies. So this space will change. It will often overwhelm the future shorting, because future shorting is bad, okay, for crypto, very bad. And you guys seen it ever since January, okay, when it starts shorting. ETF is good. ETFs will only allow people to come in to buy the price up. All right, so that's the major difference. So make sure to keep watch, do your research, watch the prices. All right, cost dollar average all the way down to make sure you don't miss out. Because hey, if this thing takes off, floodgates open, you don't want to try to buy Huobi at $7, you know, when it's too late, or $8. You don't want to buy Binance when it's around $20 either, right? So just in case, you know, and don't expect this thing to just keep going up. It's going to retrace too. We don't know, but just get your money ready to buy it down too, and don't complain if the price drops, because it could happen. So that's why I have funds set aside in hopes for it to drop. So I wanted to drop so I could get at a better price. So that's all you have to do, is just diversify your funds properly so you know when to invest and cost dollar average all the way down. All right, if you have to. If you have to cost dollar average all the way up, that's fine too. No one's going to get the best price every time, but you could try to shoot for the lowest, but hey, if it doesn't reach your price mark and it takes off, what are you going to do? Best way, strategy wise, cost dollar averaging. All right, so you guys will see this. Even JP Morgan proclaims Bitcoin ETFs are the holy grail. Now, what did JP Morgan, what did Jamie Dimon said before, right? He said Bitcoin was a fraud. Now he says the ETFs are holy grail. Great. We should have seen that coming already. We know he was full of it, but now all the banks are getting involved, all right? And here are some of the main reasons. Easier access. Investors need wallet to trade the physical Bitcoins today, making it hard to access. ETFs are frequently traded and highly accessible via investors' brokerage account. So you can get ETFs on a stock exchange easily, or with your broker, you just call up your broker and you get your ETF in crypto, just like that. You don't have to try to figure out how to use a wallet because it's very daunting for any beginner to try to learn how to use a wallet and send money. You're scared to lose it, you're probably going to get hacked. You put on the wrong places. It's very daunting to use Bitcoins for the first time for new investors. All right, so liquid market. ETFs are actively traded and highly transparent. Easy to liquidate. Those are low risks because it's less volatile. It's not a single coin, and it's just the risks are spread out throughout the portfolio. So that's why it's higher demand for these kind of portfolios, for these ETFs. High integrity. ETFs are traded through brokerage accounts that carry with them insurance via SIPC. So that's what these bankers are looking for. These hedge funds, they want an insurance for their investment because they can't go gung-ho and try to invest into Bitcoins like how we invest on Bitcoin in the market, where we risk our money on exchange, or even, like people get hacked and there's no insurance for this kind of investment. All right, so because there's no insurance that covers exposed holders to potential fraud and death, but on an ETF, it's insured. Okay, so that's what these banks are waiting for. That's when they want to make their full move, is once they know they have a minimal risk versus reward, they're going to move in. All right, so we just got to wait for that, for US regulation to give the full green light on ETF. It's still in the process and it's going to happen. It's leaning towards that, okay? It's only a matter of time. All right, so if banks can be persuaded to cease their hostilities toward cryptocurrencies, they would help in obtaining SEC's approval for Bitcoin's ETFs. If the SEC allows any Bitcoin ETFs, many financial experts believe that interest from retail and institutional investors and their billions of dollars could propel Bitcoin's value to amazing highs. So you guys can see that already. Now you can see JP Morgan, they're one of the leaders in the banking industry in the United States. Now they retracted their negative comments on Bitcoin and blockchain technology, all right? And they're favoring it to the public. So you can see that other banks are going to follow the leader, and JP Morgan is actually going to start this trend and set this the right way, because they know they're going to lose out on a lot of money. They know they have to get with the program. So it's only a matter of time. We're going to get this ETFs approved by the SEC. Bitcoin ETF dreams kept alive with new SEC filing. This is very recent, June 6th. Right over here, you have Van Eck Associates Corp and SolidX Partners filed a request to list Bitcoin-linked ETPs to United States Securities and Exchange Commissions on Wednesday. The fund will be physically backed, which means it will hold actual Bitcoins and will be insured against loss or theft of the cryptocurrency, according to the firms. These are real Bitcoin-backed securities. Now, if you remember the gold and silver ETFs, the problem with that is that they created a lot of paper silver, paper gold, inflated the supply of silver and gold, and it dropped the price of those commodities. So the big concern is if they would do the same thing with Bitcoin, right? So if they started creating their ETFs with all this imaginary Bitcoins, just printing money out of nowhere, increasing the supply without actually buying the Bitcoins, this can cause a real problem. SEC, they really have to scrutinize and watch these companies when they release these ETFs on the Nasdaq or anywhere on any exchange. If they could just print Bitcoins in their ETFs by manipulating their portfolio to the public, it can happen. All right, we've seen it happen with silver and gold. It's possible. So that could really devalue the price of Bitcoins if they start printing out all these Bitcoins out of nowhere. But hey, blockchain technology, if you think about it, it's not going to allow them to do that because it's public now. All right, so we can all track how many Bitcoins they're holding, all right, compared to how much they offer in their ETF. So actually, coming to think about it, it's going to be a very safe ETF for the supply of Bitcoin and the value of Bitcoin. It's not going to work like the silver and gold debacle that we've seen in the past decade, all right, because there's no proof, there's no public proof of any of the silver or gold any of these ETFs were holding before. But now with Bitcoin, it's all blockchain. We could trace it. So actually, this shouldn't be a problem. All right, just thinking this through, this is going to be very good news for cryptocurrency as a whole. And also it's going to be insured against loss and theft, which is a huge issue with cryptocurrencies. So that's going to allow investors, financial institutions, big money to feel very secure with putting their money into this. So that's why the crypto space can easily 2, 3, 5x within 6 months, a year. This can happen very fast. Okay, the banks are coming, hedge funds are coming. All right, it's going to be spread throughout mainstream, and it's so much easier for anyone just to get on their stock exchange account, which they're already doing, and buy some stocks or ETF funds on cryptocurrencies, blockchain, Bitcoin. So now obviously the Winklevoss twins, their Bitcoin Trust ETF got rejected, but this time Solid X and Van Eck were amongst the companies who had filed to list funds, and they said they hope to address regulators' concern with changes they made in a new joint request by increasing the share prices and basing prices off regulated trading firms. Based on various comments, it seems that regulators are concerned right now about having an ETF that is available to retail investors. Delancey said in a telephone interview, "We think that would change over time, but right now, a good place to start is with a product geared purely towards institutional investors." And that's what we want. So we want the financial institutions to get on board with cryptocurrencies through these ETF, which is very accessible and easy to buy and low risk because it's insured. Okay, and it's going to be very expensive, 25 Bitcoins per share. All right, so that's the minimum that these financial institutions are allowed to invest in, which is currently about 188,000 according to Wednesday's price. All right, so there you have it. You guys make sure if you guys want to get involved into investing into these ETFs. Huobi has the H10 coming up in early June, anytime now. So that's why you see a lot of volume picking up with this purchases to this price. So get ready for that. Start thinking about Huobi and start looking at it. Binance, hey, their price has been climbing steadily. Is it too late? I don't think so, you know, because I could see Binance easily around the $20 to $30 level in the next 3 to 6 months easily. All right, so that's when they raise $1 billion. Injecting $1 billion into this, that's a 30% increase. All right, that's like a third, a 33% increase in value that'll come into their coin. All right, so don't look at day-to-day price volatility. Just start ensuring that you could cost dollar average all the way down, all right, and just secure your positions that way. So get ready, guys. It's going to be an ETF board. There's going to be a lot of ETFs available to the public and a lot of financial institution money coming in, bringing the price of crypto up. All right, so this is very good news. And if you guys like the information I'm providing to you guys, make sure you hit that like button and comment. All right, I would love to hear what your thoughts are on these ETFs, and if you guys have any questions, I'm always there to answer. Join my Telegram group. You guys will get the info first before I release a video. All right, if you're new to this channel, make sure you hit the subscribe button and turn on that notification, and I'll see you guys on the next video.